is Bitcoin's been going up about 55 or 60% a year for the past 4 years. It's been going up a little bit faster before that. But right now, Bitcoin's appreciating 60% a year. The S&P index, which is the conventional cost of capital, is more like 14, 15% a year. So you've got like a 4x difference. You have $1 billion, you're in Africa, and I tell you, you can go and invest in anything in Africa. You got to hold it for 30 years. I'll give you 1,000 guys to analyze everything. Or you can buy $1 billion of Bitcoin. And you're like, well, the $1 billion of Bitcoin is doing nothing. I'm like, yeah, you're keeping the $1 billion forever and you're doing nothing. The $1 billion invested in Africa is I'm taking Egyptian risk. I'm taking Zambia, Central Africa risk. I'm taking Nigeria risk. I'm taking risk on that ranch, right? I mean, because it might not feel like much, but when you're compounding over 100 years or 200 years, and so what do all those four have in common? Well, they're all something you would want to hold for more than 100 years. And so what is Bitcoin? Bitcoin is the next frontier. We've already gone as far west as we can go. Now we have to go to cyberspace. I mean, eventually we'll go to outer space, but
Bitcoin is revolutionizing the financial world. Outperforming traditional assets like the S&P 500 by 4x, it has proven itself as a superior investment. In this interview, Michael Saylor, CEO of MicroStrategy, dives into why Bitcoin is the future of wealth, offering a unique value proposition for long-term growth and security. Don't miss this insight into Bitcoin's incredible potential.
basically, what I'm saying is that the 29% ARR is the risk-free cost of capital in the crypto economy. And the way you get to that number is Bitcoin's been going up about 55 or 60% a year for the past 4 years. It's been going up a little bit faster before that. But right now, Bitcoin's appreciating 60% a year. The S&P index, which is the conventional cost of capital, is more like 14, 15% a year. So you've got like a 4x difference. The mainstream economy is plus 15 points. Bitcoin is 60. They're going to converge. Bitcoin is, as Bitcoin gets to the size of the S&P, when it's 100 trillion or 200 trillion and it's close to the S&P, it's going to be 1.5x the performance of the S&P and 1.5x the vol. The VIX, which is the S&P volatility, is about 15. The ARR is about 15. Bitcoin's like 60. I mean, and you can figure it out from the law of large numbers. When Bitcoin's $100 trillion asset class, it's not going to be as volatile. And of course, at some point, companies in the S&P are all going to hold Bitcoin. And so like if MicroStrategy gets in the S&P and Tesla owns Bitcoin and other companies, you know, if Microsoft starts buying Bitcoin, pretty soon the performance of Bitcoin is going to goose up, is going to improve the performance of the S&P, and then Bitcoin's going to converge. Bitcoin's always going to be more volatile because it's 24/7, 365, and it's always going to be higher performance because it doesn't have the risk factors of property or companies and the like. That's a very useful chart. You can pretty much understand the world if you focus on that, which is if you capitalize on bonds, you're minus 5%. That's why all the banks are struggling, and that's why operating companies can't accumulate capital. Because what that's telling you is that if you're using bonds as capital, it's toxic. It's sucking 5% of your life out of you. And look at the cost of capital, 15%. So here, if you use bonds, you're minus 20% versus the S&P. That means that it's an awful, way to build shareholder value. If I asked you, do you want to hold $100 billion of cash in bonds and you're Apple or Microsoft, the answer is no, because it's minus 20%. You might as well just give it back to the shareholders. They put it in the S&P index. But now look at the other side, right? Bitcoin is 4x that. So if I said you could put $100 billion into bonds or $100 billion into the S&P or $100 billion into Bitcoin, which of the three charts do you want? It's pretty obvious. You take the 60%. So what MicroStrategy did is we capitalized on Bitcoin, which is 60%, and then we levered it up with cheap convertible debt and equity raises, and we got to 120%. And that's how we ran 30x. Like, that's why we outperformed NVIDIA. Like, we're 2 or 3x NVIDIA over this time period, because we're actually capitalized. The big idea here is there's $450 trillion of money invested in bonds, invested in real estate, invested in equity by wealthy individuals, families, and institutions, and it's just for a long-term store of value. People that are wealthy just want to stay wealthy. People just want to keep their money. So they're buying these store of value assets from the 20th century, and those store of value assets, they kind of bleed 3% energy because of famine and hurricane and war war and inflation and competition and obsolescence and accident and torts and unions. And fill in the blank with all the things that cause your investment not to work. That's 3% of 450 trillion. That's like 10 to 15 trillion dollars of entropy, of chaos every year. So the big idea is Bitcoin is just here. The money is just running from the 20th century to the 21st century. It's moving from physical space to cyberspace. It's moving from the finance space to the digital economy, the analog to the digital. What we're saying is sometimes the most lucrative thing you can do is do nothing. You have $1 billion, you're in Africa, and I tell you, you can go and invest in anything in Africa. You got to hold it for 30 years. I'll give you 1,000 guys to analyze everything. Or you can buy $1 billion of Bitcoin. And you're like, well, the $1 billion of Bitcoin is doing nothing. Yeah, you're keeping the $1 billion forever and you're doing nothing. The $1 billion invested in Africa is I'm taking Egyptian risk. I'm taking Zambia, Central Africa risk. I'm taking Nigeria risk. I'm taking risk on that ranch.
Over the past 4 years, Bitcoin has been on an unstoppable trajectory, surpassing the S&P 500 with an annual appreciation rate of 60% compared to the S&P's 15%. As Bitcoin nears the $1 trillion mark, its volatility is expected to decrease, making it a safer, more reliable investment. The increased corporate interest in Bitcoin is a major catalyst, with companies like MicroStrategy leading the charge. Michael Saylor draws parallels between Bitcoin and Manhattan real estate, emphasizing its potential to appreciate over decades or even centuries. With projections suggesting Bitcoin could reach $240 trillion in value within 21 years, it stands as an unparalleled investment for long-term wealth preservation.
Most of the time, people have to take risks and then they got to worry about it. Bitcoin is risk stripped away from the capital and inflation stripped away from the capital. So when I evaluate any investment, my view is, okay, well, is it going to give me a risk-free 29% ARR? By the way, coming back to that, it's like 60% ARR collapsing down to like 20% over 21 years, and the average works out to 29%. And the assumption is the dollar supply keeps growing at 7, 8, 9%, and then you get an additional gain because we invent robots and AI and flying cars. And so the actual S&P index is growing because the US prints more dollars, but it's also growing because we invent obscenely cool, useful things like the iPhone or like an electric car. So the future is good, but at the end of the day, Bitcoin's future is just pure digital capital. And I look at it as, why don't I just keep buying something going up 29%? All I got to do is borrow the money or raise the money at a cost of capital less than 29% over 21 years. And, it makes sense for us because we're a pure play, right? People want us to do that. So if you have a chance to buy Manhattan for 60 guilders in 1626, you should buy it. But what I would say, which is deeper, is you could buy Manhattan real estate every decade for 300 years and always pay more than the previous guy paid, and it would still be a good idea. And that's because it's the greatest city in North America. Yeah. Everybody wants to do business there. There's a limited amount of land. It's a perfect rock, limited amount of land. So there's never a bad time to buy Manhattan. The takeaway from that slide is the key to getting rich is by scarce, desirable property. Pay for it with fiat. How much is a guilder worth today? Like, pay for it with money you printed. Yeah. Borrow the money. We borrowed the money to pay for Alaska. The country was broke in 1867. We just fought the Civil War. But what did we do? This guy Seward had the vision to print a $7.2 million check, pay off the Russians. And so number one thing, buy the property. Number two thing, hold it for a long time, right? Because it might not feel like much, but when you're compounding over 100 years or 200 years, and so what do all those four have in common? Well, they're all something you would want to hold for more than 100 years. And so what is Bitcoin? Bitcoin is the next frontier. We've already gone as far west as we can go. Now we have to go to cyberspace. Eventually we'll go to outer space, but we're waiting for upgrades in propulsion to go to Mars and the asteroids. But between now and then, you go to cyberspace, and the real point is Chinese billionaires billionaires, Russian billionaires, African billionaires, South American billionaires, every company on the planet would rather have their money in the US, but they can't get it to the US. So where else can I put it? I can put it into the city of Bitcoin. I buy Bitcoin, I sell Africa, I sell Venezuela, I sell Russia, I sell Siberia, I sell China, I buy Bitcoin. Bitcoin is digital capital. Everybody wants it. Everybody knows about it. No one can steal it from you. And what's the use case? Well, the use case is to get rich or stay rich, which is like half of everything. Right? The great irony is people can't figure out what it's good for. It's like for the last 10,000 years, people have been trying to figure out how to get money and keep it. What it's good for is the wealth that allows you to power your family, your country, your company.
Michael Saylor's perspective on Bitcoin highlights its unmatched potential as a digital asset for wealth preservation. With its scarcity and increasing corporate investment, Bitcoin is poised to outshine traditional assets in the coming decades. If you're looking to secure long-term financial stability, Bitcoin is the asset to focus on. As Saylor points out, the future is digital, and Bitcoin is leading the way. Stay ahead of the curve and consider how this revolutionary asset can play a key role in your portfolio. Don't wait. The time to act on Bitcoin's future is now.